Good afternoon and welcome to the CYANCONNODE Holdings PLC Investor Q&A session. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. It can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. The company review all questions submitted today and we'll publish responses where it's appropriate to do so. I'd like to submit the following poll. Before we begin, I'd like to run a short introductory video.
As low-cost technologies and big data are realized, IoT, or the Internet of Things, is expected to increase in value and volume significantly over the next few years, dramatically impacting everyday life. IoT is driving the need for highly efficient communication to maximize the use of finite spectrum. We are beginning to witness the unprecedented adoption of narrowband technologies to meet this rapid growth. Narrowband RF mesh networks offer reliable and resilient communication for long-range, low-power solutions. CYANCONNODE is a world leader in narrowband RF mesh networks. Its suite of innovative solutions provide a communication platform for the deployment of large-scale networks for quality-of-service IoT applications. CYANCONNODE's networks are self-configuring and highly resilient with built-in security, whilst providing a low total cost of ownership. Our Omni IoT strategy aligns our existing technology portfolio and business models with the rapidly changing needs of our customers. Through a future-assured dynamic investment model, our customers are empowered to act today and have the confidence of long-term business stability. CYANCONNODE provides a diverse portfolio. Our narrowband technologies consist of many mesh networks connecting millions of devices, all managed by one server platform. The server provides network and device management, handling operations such as firmware updates, configurations, monitoring of devices, and the network security management. The agent is integrated within a device, enabling the device to be securely connected to the network. In some solutions, an agent automatically detects if the device has a working backhaul connection. If yes, it will take the role of a mesh gateway. Otherwise, it becomes a mesh node. Our Mesh WAN connection can be enabled through many technologies such as cellular, Ethernet, or fiber. Our narrowband solutions support flexible WAN backhaul, which is never likely to become congested. For IPv6-based solutions, any enabled device can communicate directly with an external system, as CYANCONNODE offers true IPv6 networks. However, when there is no IPv6 backhaul network available, the server can route application data through an IPv4 network to an external system. CYANCONNODE solutions offer standards-based server platform APIs that are easily integrated with customers' critical applications. CYANCONNODE delivers exceptional value. CYANCONNODE is able to connect any device inside or outside any building, globally, in a cost-efficient and highly reliable way. CYANCONNODE, Narrowband IoT.
Fantastic. I'd now like to introduce John Cronin and Heather Peacock, CFO.
So welcome everybody and compliments of the season. Hope you're all keeping warm in this chilly weather here in the UK. So just to refresh our minds about CYANCONNODE, we thought we'd put the video up to explain what we do and how the product is implemented. And we are all about wireless communications, and we do have PhDs based in Cambridge that do the architectural design and also the hardware and the software of the system, the end-to-end system that we have. And we go to market through multi-million-dollar organizations such as system integrators, meter manufacturers, EPCs, etc. And I think most of you know that we offer an end-to-end solution, and not only for electricity metering, but for gas, water, anything in the neighborhood network that we can connect up. The really exciting moment that we're in now is that India is rolling out over the next 2 years 250 million smart meters. I should say ordering 250 million smart meters. And these smart meters are actually prepaid smart meters, which is really important as opposed to the postpaid that has been there to date. If you look at that market of 250 million prepaid smart meters, the addressable market for CYANCONNODE is worth about $5 billion. So it's a huge market for us to go at. I'm not saying we're going to win all of that, but I'm going to be saying that we'll win a good proportion of that. And if I just put a an approach to what I think we can do in the next 5 years, round about 20-30 million smart prepaid meters, the communications of, will give us a revenue of between $400 to $600 million, which is a huge amount for a company that, this year we're aiming to do 12.5 million pound sterling as a combined entity, never mind just in India. And since only the last few weeks, the number of tenders that are out there right now, out of the 250 million, is 75 million smart meters. And that has a potential worth to us of about, in excess of £1 billion sterling. And, it's really important that we're at the forefront of this technology. We're at the forefront of what we'd be doing. We've been in India for the last 10 years. We are number one in RF communications in India. And why is that? Well, what we've got is a standards-based IPv6 low-pan standards. That's an international-based standard that's really important for India. We also play to a standard IS 16444 that is applicable just for India, and we give a tick in the box on that. In fact, we sit on the standards-based committees in India and actually offer advice going forward as to what the standards should be adopted going forward. What really is important, that what we offer in our solution, our platform, is a performance level of throughput of data from the meter in the home all the way through to the billing system of the utility, a performance level of 99.5%. That's really good, plus actually. In fact, we can do 99.95%, but we're really pleased with what we offer now. Mobile operators, they're somewhere in the region of 90 to 95%, and therefore they need to really look at maybe a hybrid approach with us to actually get them up to 99.5% plus. Our network as well is a very secure private network, unlike the cellular network. As we all know, the cellular network is an open network that any of us can tap into. So if you leave a football match, a cricket match, rugby match, and you try and use your mobile phone, the cell gets clogged up, and not everybody can make the call at the same time. With our private network, we configure it for the peak amount of data throughput, and that's why we can guarantee 99.5%. Nobody else is going to steal any of that capacity, any of that bandwidth. The other good thing about us as well, we are meter agnostic. I'll just take India, where traditionally we were integrated with 3 meter manufacturers. Now we're actually completing work to integrate up to 9 meter manufacturers. Why? Because of this huge growth going for 250 million smart meters. In our platform as well, over the last sort of 12 months or so, through innovation, we've allowed cellular to be able to connect to the platform, NB-IoT and PLC. And we're always looking at innovation, looking at, cost down as well of the product. Already we've got quite a hefty chunk off some of our silicon, because the silicon providers can see the opportunity that's coming through now and the volumes that are coming through. So we're really pleased with, getting quite a significant reduction in the cost, something in the region of around about 25%, which is really good. Part of innovation as well, long range radio. Traditional RF mesh would go to about 1 kilometer. We're now getting with long range 9.5 kilometers. And that's another reason why our performance is high, and that we don't always have to rely on cellular. But we always will, if our customers say we want cellular or NB-IoT or PLC, we say, look, okay, Mr. Customer, it's not about the platform and the technology. What you want is the performance level of 99.5% plus, which is really important. And also proven model for us, we've deployed worldwide 2.7 million units to date, which is really exciting. And also, a part of that is about 1.3 million that we've deployed in India to date.
That's great. Thank you very much indeed, John. You've obviously released interim results for the half year ended 30th of September 2022 today. Heather, can you just provide some highlights, please?
Yes, hi Paul. So revenue for the first 6 months was an amount of 1.3 million. Obviously this is down on last year, but the main reason for that, we had by the end of the last financial year, we delivered majority of the hardware on all the previous orders. So as you know, or just to refresh, we'd taken orders for up to 1.3 million units prior to the end of March this year. And most of the hardware on that had been delivered. So what we're recording on those contracts is really the software and the services element of it. And then during the first 6 months in India, as we'll talk through in a bit more detail, they've been going through a process of putting in place this revamped sector distribution scheme and approving that and improving the empanelment process as well. And all of that has been going through in the first 6 months. We've won, as I said, 1.3 million units further in India since the start of the financial year. So we've actually doubled our order book in the 6 months. And the largest one of those orders actually came through in August. So if you think in terms of revenue, obviously we weren't going to take very much revenue on that in the first 6 months. So we've got that 1.3 million that we won, as well as $9 million worth of revenue from the orders that we won in the Middle East region. And all of that is rolling out at the moment. So it's understandable that the first half was going to be lower. It was always in terms of our market expectation that we put out, because as you know, we only put out numbers into the market towards the end of September. So it was always with the first half, with the majority of the revenue weighted towards the second half. Just continuing on some of the highlights, the gross margin was 49% for the first 6 months. That's because the majority was more the sort of software and services, whereas as we move back into hardware, we expect those margins to be slightly lower because they are lower on hardware. There was a small increase in operating costs. I think most of you know that over the last few years, we've been very cost conscious and we've been keeping costs to a minimum. But as the company grows, and also you will know about current inflation, I think inflation in wages, it's understandable that there's a small increase in the operating costs, which then led to the operating loss. And the reason why the operating loss is higher than last year is obviously because of the revenue. But as the revenue comes in the second half, we expect that to sort of smooth out. Our cash at the end of the 6 months was 1 million. Included actually in the balance sheet was about 350,000 units, long lead time components that we purchased, because as we've mentioned previously, there have been shortages in the market. So just to make sure that we can deliver on the orders that we've got for 1.3 million, we have been stocking up and purchasing the components, the long lead time, so that we've got it available for that. And as I've mentioned earlier, there was 1.3 million units won in India, which doubled the order book, and $9 million of orders for the MENA region. Just then talking about the debtors on the balance sheet at the end of the period, because that's a question that we get asked by many of the investors. Obviously, it's key to make sure that we are collecting cash and getting paid for the contracts that we're rolling out. So you can see that there was a reduction from 7 million at the end of March down to 4.6 million. And in the 6 million, that includes certain milestone payments that are not due yet. The models that we've had for the orders that we'd won prior to the end of last year, they were based on sort of where we, shipping the modules, we get paid for those within anything up to 60 days, but majority on letters of credit. So all of that has been collected. And then all the services, actually, there's sort of elements of milestone payments included in those debtors where we have to achieve milestones such as, for example, implementing, when we install, for example, 10,000 meters, for each 10,000 meters, we reach another milestone and it triggers another payment. So within that 4.6 million, not everything is actually due yet. So we've received 4.5 million cash from customers during the period and a further 2.3 million since period end. Improved payment terms with customers. So part of the reason for that increase in cash received from customers is because we've got, for example, the contracts in the Middle East. Those have got where we require them to pay up front before shipping. So there'll be an element that they pay when they call off the shipment, and then before we actually ship it to them, they'll pay the balance. So we get all that cash up front. There's no sort of waiting after shipping. And also on the million unit contract that we won, the payment terms on that, we've set up Genus, who's a meter manufacturer, and do their own meters. So they are going to manufacture our modules that will go into their meters as well. So obviously payment terms on that, as we receive, cash from the one end of Genus, we'll pay that. So there's no waiting time in between that as well. Improved costing on components. We've managed to get a significant reduction in the cost of our components because the suppliers recognize the large opportunity in India, and we're working very closely with them to ensure that we can meet the supply chain as well as, like I say, getting the best costs from them. The additional manufacturing capacity, so that includes setting up Genus. It includes setting up other contract manufacturers as well, just to make sure that we can meet the demand as we go along. And then the final slide within the interims is just talking about post-period end. So what has happened since the end of the period is we took $500,000 from a subscription that was from an existing shareholder who had participated in previous placings and previous investments, did a subscription which was for $500,000, and substantial increase in revenue. As we've said, in the quarter that ends December, we will have taken 3 times as much as what we took in the first half. So you can see the ramping up as we start to deliver those orders that we took in the first half of the year. As I've mentioned before, further 2.3 million cash received from customers, taking the total to the year to date to 6.8. Cash, this is as at the end of November, was constant at 1 million. And then I think, as John mentioned in his slide earlier, there are current tenders in India for more than 75 million. I think when we presented at the time of our AGM only a couple of months ago, it was around about 41 million units that were up for tender at the time. So you can see the ramp up in that, just in that short period of time, as the government moves with that target of rolling out the 250 million. And further investment in component stock to ensure we can deliver on the orders. We had 350,000 units in stock at the end of the financial year, and we're continuing to take stock of, I think it's up to about 450,000 that's being delivered at the moment and into the next quarter to ensure that we meet those targets and orders.
That's great. Thank you very much. John, the Indian government recently announced approximately a 30 billion revamped power distribution scheme. Can you refresh us on the key points regarding this scheme and how CYANCONNODE will be able to take advantage of that opportunity now that you've been established as a leading position in the market?
Yeah, indeed, Paul. So as we've just described, there's a huge volume that's going to be ordered in the next number of years. So the government, wanting to really improve the efficiencies and financial stability of the utilities, have come up with this scheme, the Revamped Distribution Sector Scheme. And really, this is to put money behind the plan to actually ensure it does happen. And that's certainly to the value around about £30 billion worth of investment by the Indian government. And that equates to round about 15 to 22% of the projects. So each utility will get 15-22% as grant money, so free money basically, to encourage them to roll out prepaid smart metering, which is really important. And they're looking at the efficiencies of the data going through of not less than 98%. And as I mentioned earlier on, CYANCONNODE, we operate at the SLA level at 99.5% plus. So we're well above that threshold that they put out there for the utilities to be able to bill correctly and collect the cash. And as you know, within prepaid, it's really important because the consumers are paying the money up front, and want guarantees that the electricity will be there when you want it. Part of the process as well that's been going on in the last number of months is that they've come out with a process called empanelment. And this empanelment is empanel the AMI service providers, that's the Advanced Metering Infrastructure Service providers. These are the big infrastructure funds now that are coming in to bid directly to the utilities for these large contracts. And anything from a contract might be 1 million to 6 million units, etc. So there's sort of 30 plus companies now that have gone through this process, and we've been part of many of those to show that there's a full end-to-end solution that can be delivered, and there's a tick in the box to those AMI service providers before they actually even get into the tender stages. And the tender stages, then there's a pre-qualification that happens, there's a technical design that happens, demonstrations that happen of the equipment, and then there's a commercial, and then there's the award up to the lowest financial bidder for getting to what they call the L1, the level 1 award of contract. And we're involved in many of these, and that's why, well, this program really only kicked off when the Prime Minister Modi kicked it off in August this year, and also the empanelment has taken a little bit longer to do, and in the main most of them are done, but I think it'll be a continuous program. As other players come in, they'll go through an empanelment process before they're allowed to bid for these contracts. Not only have we done that in the time, but for the market as well, we went to Shimla in the HP region and proven the long-range radio. So instead of us around about 1 kilometre now, it's 9.5 kilometres, and the engineers have been out there, proven it, climbed up the mountains and got that sort of range, which is excellent, really, from a performance point of view, and will bring in a lot more remote areas into the smart metering program. So hopefully, Paul, that gives you an idea of that program there. And look, it's not just about it's not all about India. There's other places in the world we're working in, apart from the UK, apart from Sweden, Thailand. I've spoken about it in the past, but the real one that's coming on is UAE, where we're working both in Saudi Arabia, Abu Dhabi, and that's really going well. We won sort of $9 million of contracts there this year, and most of that will be deployed by March. So you can see with what's happening in India, what's happening in the UAE, for instance. This is where we're confident about hitting the numbers that the analysts have put out in the market at £12.5 million sterling, because of that and because of the other areas that working that. And we are involved in Africa, and we're also looking to other areas of the world that's listed here to implement and win new contracts.
That was going to be my next question, actually, John. You've also got a great management team. You've delivered these projects, large-scale deployments, and with global partners. You've got that footprint you have now. You've touched on some of those areas where you are going to expand. Is there anywhere in particular that you're really focusing on?
Well, yeah, I mean, what's really important that in the last number of months, the last 6 months or so, we've really put in place additional key management personnel with the right skills, the right experience, and right knowledge. And that's what we've been doing both in the UK and in India. And we continue to recruit as well, all the way through, from finance to engineering to sales. And as you know, with sales, we use the partners' sales machines to go to market. As you know, we go through third parties, as I mentioned at the beginning of this. And it's really important that we have all of that to ensure that we can take on board what we've won, what we plan to win, and ensure that we got the growth of the company. And as Heather mentioned as well, that the cost isn't exponential to the revenue. I mean, up until sort of the beginning of this financial year, our cost base was the same since 2018 to now. Yet our revenues went from, in 18, something like £1 million to in excess of £10 million. But the costs stayed the same. And as Heather mentioned, yes, there's some costs that will go up, etc., in different areas because we're recruiting people. But that's because we know we're winning more orders. And the good thing about it is, to create in these other countries like the UAE, we just got to have more people to deliver those projects. It's as simple as that, really.
Fantastic. Thanks again, John. Heather, I think one area that I'd like to touch on with you really, in 2021, you received the London Stock Exchange Green Economy Mark. Can you explain a little bit more about this award, what it means for the company and how it positions you?
Yes, I think that this is something, it's an area that's becoming more and more important. Everybody knows, the importance of, making sure that we sort of try to meet the goals of COP27. The Green Economy Mark is for funds that generate 50% or more of their total annual revenues from products and services that contribute to the global green economy. And obviously, and they went through quite a detailed process of looking at our technology, what we have rolled out. And as I say, it was great that we were awarded this. Just on the next slide, there's some information just around what the savings are that are being made, in particular in India. From the units, the 1.1 million that are rolled out in India at the moment using our technology. If you look at this number here, the INR 199,800,000, so that works out to being about £2 million saving per year as a result of these initiatives. Savings in CO2, savings in fuel, all sorts of savings that the utilities are seeing. And obviously, this technology is then helping contribute to the goals of India. And as we roll out in other countries, then to their goals too.
That's fantastic. Thank you, Heather. In summary, I guess, what are the key priorities and points for shareholders to look out for over the coming year? Also, do you have any thoughts on the share of the Indian smart meter market that you might be able to capture, and what could that be worth in module and additional services and software revenue going forward? So quite a few things at the end there, but just as a bit of a summary, please.
Yeah, no, absolutely. Look, I mean, the government of India, are very ambitious and rolling out and, giving orders for the 250 million smart prepaid meters in the next 2 years. They're proving that by 75 million now actively being, tendered. And right now, our partners, that's CYANCONNODE's partners, have won, as the L1 status, that is, in excess of 25 million meters. And if we were to win 100% of that, I'm not saying we will, by the way, but it'd be great if we did, wouldn't it? We'd all love that. It's equating to 360 million revenue to CYANCONNODE. And, if you look at where are we today, well, we have the install base that's already there. We're 25% of the market in India. Since April this year, we're actually at 27% in terms of volume of winning the business. And if you take 27% of the 25 million, that equates to about 100 million in revenue. And again, I'm not saying we're going to win all of that, but if we only win part of that 25 million, if we win the 25 million, if we only win, the 27%, that's still an awful lot of units and great revenue for us. So really, we're very confident now that the real orders are coming, the avalanche, if you like, is coming, and we see it as a bright future for continued growth. In the last 3 years, we've had year-on-year revenue growth, and we'll continue to do that, and well into the next years coming, as we predict, and we see the volumes coming along and what we can deliver. And of course, it's not only, as I say, just in India. We got backed up both in Thailand and the MENA region that I talked about in the Middle East as well. So really good outlook for us, and that's why we're working 8 days a week at the moment. I mean, people are working long hours in India and the UK, doing a great job, because there's an awful lot, with the empanelment, the demos that we've been doing, and then the tenders that we've been going out and tendering for, and then of course getting down to contract stages. You have to understand that each tender we may have multiple partners that's bidding. So we may have 3 or 4 partners all bidding for a tender. And of course, that means we've got to do 3 or 4 different credentials, different criteria for each one of those bidding. So it's multiple amount of work that we all have to do to get through to the end goal and make sure that we're with the right partner who's going to win, and make sure that between us all, we can deliver and collect the revenues and ensure that people are delighted in the utilities, in the performance that CYANCONNODE gives.
That's great. Thanks, John. That's a lot going on by the sounds of it for next year, which is great stuff. A few other questions. I know some that you've had in, and we'll touch on some of the pre-submitted questions we've had and some of the live ones as well. What is it that differentiates CYANCONNODE proposition versus a competing solution when you're tendering? Why are you better than the competition? I guess something that you come up against all the time.
Yeah, sure. So I think the real key is, look, our credentials are really first class. We are number 1 in India in terms of capabilities. We've been there for in excess of 10 years. So we're showing that we can be there when we've just got a few orders, and we can see that we're going to be there for the next 10 years. And that's really important, that our customers look for is longevity and ensuring that we're there for the long term, because these contracts now have been awarded for 10 years. So, they want to make sure that they're with a company that can perform, that deliver, know what they're doing. Look, we've deployed 1.3 million units to date. We got orders since April of another 1.3 million that we're heavily involved in now and rolling out right now. That's why we've got the orders. We don't need any new orders to meet the £12.5 million revenue this year. So we're actively deploying and executing against those contracts. And that's what they're looking for, is a quality product that delivers, as I said earlier on a couple of times, 99.5% performance. And that's what we do. So we always go the extra mile in the end-to-end solution. So if Oracle-based systems need some extra tweaking on the software from the billing platform, we have real clever people, technology people that can do that and actually help our partners tweak whatever they need to tweak. We help the meter manufacturers to make their dumb meters smart, and we make sure the end-to-end solution is there so we can all get paid. So going the extra mile is something that we do and proud of within CYANCONNODE.
That's great. Thanks, John. Question as well we've got here is, sometimes I think people can lose sight of it. As someone who doesn't know the company well or the industry, would you explain to me why it is the solution you provide is needed? And again, I guess that's pulling it right back to basics, but sometimes these things are great to understand. What is the basics to how you actually grow your business?
Well, we've all seen, the extra cost there coming, the electricity going up just in the UK, etc. And really, there's controls need to be put in place to ensure we're not wasting the electricity, that electricity is put there at the right time for when people want it. And part of that, give you an example. In India, look, they generate electricity, they distribute some of the electricity, but they don't collect the cash. And in India particularly, they lose $32 billion a year. Every year they lose through theft and the inefficiencies of the infrastructure in the utilities. That's a huge amount of money, and they have to fix that to grow the GDP of the country. So electricity is vital for every country, including the UK. So you need to know who's burning electricity when, are they paying for it? Where else should they build out the infrastructure to put this? So it's really important that they have the right sort of infrastructure and the right platform to be able to do and know who's using the electricity. So it's kind of important, really. When you look at what they want to do in India as well, the whole world in terms of, if you look at the power industry, it's a bit like the telecommunications industry. So we're going from analog world in the power industry, the utility industry, to a digital world. We're going to use and rule by sort of technology in terms of measuring the performance of electricity going through the net. So if people have got solar panels, etc., that's got to feed into the network. You've got to net that off the bill that people are using, etc., and you've got to have the right tools to do that. So it's moving then to making the utilities, because it's prepaid, profitable. So they get money up front before they have to spend that money in the wholesale markets. Though they're profitable, and in India they then want to get and sell off those assets to the private industry. The same as that what happened in the UK. India's a number of years behind where we are, but that's their plan. So it's going analog, digital, profitability, and then selling off those assets to move to even greater things within those power industry utilities.
That's great. Thanks, John, just for going through that. And I get a technology question. You're at the forefront of this industry, I guess. So, what could you perceive your solution as an alternative? Could you become obsolete as technology moves on? How do you keep up with that whole development, which we all know is moving at such a rapid pace?
Oh, always does. And I've been in the industry, sort of 40 years now. So I've seen a lot of change from the world of no mobiles to where we are now with, the mobile as big as a powerful, standalone mainframe computer on, held in your hand on these smartphones. So, we're constantly looking at innovation, and that's what we pride ourselves on. When I first arrived, we're looking at a proprietary system. Now we've got the IPv6 low pan. Now we look at a platform that not only does RF mesh, but cellular and PLC, etc. We look at being able to put a canopy out there into the network. We're agnostic in terms of any meter manufacturer, and really getting agnostic in terms of whatever communications is out there. So we're keeping up to date all the time. I mentioned long range radio that we're looking at. I look at what we call in-meter gateway. So you can put the gateway, instead of being on an external pole, all that technology sits inside the meter. Still does the same job as a gateway, but it's inside the meter. What does that offer? Better security, cost down opportunity as well, to keep the margins where they should be. So, we constantly look at that all the time. And give you an example. If only we'd, as CYAN, were known and being involved in the UK market, we won the contract through CYANCONNODE when we acquired them in 2016, and that's why we're known as CYANCONNODE. But in the UK, I wouldn't have done it this way, how it has been done. It's costing all of us in the UK around about £13 billion to roll out the smart meter in the UK. Well, guess what's going to happen here now? They've rolled it out on 2G and 3G, and now they want to upgrade to 4G, not 5G, 4G, and they're going to go back to the government and ask for £4.5 billion more to upgrade to 4G. And that means they're going to have to disrupt all the meters that are already being put out there to upgrade them in the homes, as well as this extra cost. Now, if we'd have done the hybrid where the local loop could have been RF mesh and the backhaul from the gateway would have been cellular, all we needed to do was upgrade the gateways. No disruption to anybody in the house, and nowhere near that cost, because we worked it out that instead of it costing 17.5 billion in the end for the UK rollout just to 4G, remember when they go to 5G is an extra cost, 6G, 7G, we could have done the whole country for about 4.5 billion all in. But there we go. That's another story, as I've written to people in the government to explain this to them. So we're always looking, really, Paul, at innovation and keeping as much as we can ahead of the game.
That's great, John. I think you touched on this slightly. The question we've got here: how much operational leverage does the company has? You talked about your cost base not really increasing over quite a long period of time, yet the revenue has driven through. There should be significant profit upside given that fixed costs as and when new business comes through. Can you just touch a bit, and perhaps Heather as well, just on that operational gearing of where that sits within the business?
Yeah, I'll give it over to Heather, that one.
Yeah. I mean, that is quite true. That yes, I mean, our cost base is not going to grow exponentially. There may be a little bit of growth, as we said before, recruitment that needs to happen, wages going up a bit, and inflation. But if we look at the opportunities and the size of the opportunities and the revenue coming in from them, they will far outweigh the increase in costs. So yes, there'll definitely be a significant profit upside.
Fantastic. And the last one here, we have obviously got a lot that we've had coming through today's meeting. And I know we did schedule this for 40 minutes, so we have gone over that. But if you've got time, we'll carry on and we'll cut through as many as we can. Of course, you can review these post-event with published responses where appropriate to do so. But the final one here on the screen is, how fundamental is your solution to the modernisation of some cities? Obviously, we were just talking, John, about the infrastructure, the cost, the upgrading, future-proofing, I guess.
Yeah, and I think, Paul, just to add to that, what we put out there is under RF mesh is a radio canopy, which can hook up many things in the city. So really moving to a smart city, being able to get all the data from point A to point B, that, whether it's a utility or it's someone else that wants to get data from within a city. So, as I said, moving electricity, gas, water, street lights, EV chargers, whatever's out there that, not only for utilities, but for other also other companies that really want to be part of the smart city movement. That's great.
Thank you. So let's just go on to some of the questions we've got throughout today's meeting, and there are quite a few of them. So I'll tell you what to do. Why don't we just pop our cameras up so we're a bit bigger? The first one reads here: why does the share price appear to fall after declaring positive news, and what is required to achieve the true value of the company? I'm personally dumbfounded with the lack of reality, considering the huge potential opportunities with the company.
Yeah, well, I guess I mean, we don't control the share price. I mean, there's other sort of dynamics that occur in the market, and we're outside of that. I mean, we have day traders, and quite rightly they want to make 20% buying and selling. I mean, we can't do anything about that. That's their life and business. But at the end of the day, we're doing what we're doing to show to shareholders, to investors, look, there's a big opportunity here. How many companies now can actually show you this sort of potential growth? And that's what this presentation has been all about, really is. And this is what we've been doing. We've had numerous conversations today with different brokers, etc., and analysts, and explaining to what we're doing. We're going to continue that, up until the Christmas period, and then in the new year we're doing further conversations with people, just to get the message out, really, of what is the potential. And I know it's difficult for a number of people in the UK. We're based, doing a lot of business in overseas markets. You're looking at, looking at India, you're looking at Thailand, you're looking at the Middle East, you're looking at Africa, potentially Bangladesh, Indonesia, etc. People will be saying, what are they doing out here? What is this all about? And sometimes it's us getting the message over, and sometimes we're not that clear. And then when we go so far, people ask further questions, quite rightly, just for that understanding. So, we are, I suppose, quite a complex business in a way of technology, but at the end of the day, it's simple. We're out there to win business, get revenue, get profits, and obviously that will then show in the share price.
That's great, thanks, John. And you touched on, you're seeing brokers and analysts. We've got a question here saying, can you please point to any useful recent analyst reports covering CYANCONNODE?
Well, even today there's been a couple out. So there's one from Arden Partners that come out with an analyst has come out there. Also, Cenkos has brought out a note as well. We have Hardman that covers us, and then there's other that come out, independently as well. So those are the three that I can mention today. That's actively,
there are links. There's links and a place on our website to all of them. So some of them will be to portals where people have to register to get them. Under MiFID, there are certain rules with how they can be shared, and some of them are actually sort of posted on the website as well, or links directly to the reports. So within this, maybe within questions that people and answers that people can see afterwards, I can post a link as to where those reports can be found.
Absolutely, Heather. We can put that into the published Q&A. That's not a problem. We can distribute that. A question here, maybe a little bit tricky to answer. We've been told CYANCONNODE's monthly cost over the past few years. We'll be told on a monthly basis income that's coming in, especially with new schemes that are broken out, 24-month contracts that split up. Obviously, forecasts and the like are kind of off limits. But if there's anything you can add to that, please.
I mean, as you say, forecasts are off limits, and especially that sort of level of detail. So, we generally go through the way the contracts roll out and the pricing and things like that with the analysts, and then they put their numbers into the market. So, it's really down to them. But I suppose I can give a little bit of a flavour as to the way the contracts are moving. And that is that they're moving to, in fact, all the contracts from this financial year and going forward, they have an element that is CapEx to us and then an element that's OpEx. So the CapEx will just more than cover the cost of our hardware that gets shipped, and we'll get paid for that, often on letters of credit, but certainly within 30, 60 days maximum after shipping. So we get that CapEx, and that CapEx makes up about 60% of the contract. We ship the majority of the modules within the first 2 to 3 years because that's the implementation phase of the contracts. And after that, once we've had the CapEx, then the remainder of the contract forms what are called equal monthly installments, EMIs, and those will run for the rest of the contract, so up to 10 years. So if for example, it's a 2-year installation period, the CapEx will all be in 2 years of installation, and then the remainder of the contract's EMIs will be 8 years afterwards.
That's great. Thank you, Heather.
I'm going to say, Heather, of course, that's slightly different in UAE contract, isn't it, as well?
Yeah. So the UAE contracts, I think I mentioned earlier that, we receive cash. It's, a portion of that cash is paid to us upfront before we actually sort of place the order. Well, as soon as they call off an order, and then we'll place the order on our supplier. And then before we actually ship it, they have to pay the balance. So we collect all the cash. And that is purely hardware on that contract as well. So we'll recognize that as soon as we ship it as well.
That's great. Thanks, Heather. Another one that's sort of there, but obviously investors are always keen to look at a share price, and a good rise in a share price, having peaked at 29p earlier this year, with possibly 800 million units on the books, now 2.6 million. Do you think the share price should be way beyond 29p?
Well, of course, we'd all love to say that. Of course, we want it higher than that. I mean, look, the board, your board has invested something like £6.5 million of their own money, at different stages throughout the life of, in the company. So it's in our interest. We're all aligned here to want to get the share price as high as possible. But as I say, the dynamics, sometimes I just don't understand how the share price moves. We put out good news and it goes down, not so good, and it goes up, and I get bewildered. But it's just as a people controlling the market. It's an AIM company. It happens all over. It's outside our control. But yes, the share price should be greater than that. But and that's what we're working to get up and beyond.
That's great. Thanks, John. Again, just touching on a bit of research here. Question saying Hardman and Arden both suggest a potential upward growth in the financial forecast for CYANCONNODE for the immediate future. Is it prudent to say that at what stage CYANCONNODE will reach a break-even point? Do you see this continuous once you get there? Is that a continuous process going forward?
Well, firstly, I mean, we with the contracts that we have with us and what we believe we should win in the near future, we certainly believe that that's achievable within the next sort of year to 18 months maximum. And definitely with the size of the contracts that we're getting, once we've achieved that, I would say that it should remain that we would be break even and above, certainly well above break even. We've talked about the operating leverage and certainly believe that once we've achieved that, it should continue.
That's great. Thanks for that. And Heather, the next question, I think probably directed at you, and we have kind of touched on this. With the introduction recently of the new contracting framework payment scheme, there's been a slowdown initially in the cash payments coming into the company. We'd all hope that other RF contracts will be forthcoming for the company. This should give the potential for consistent cash injection over a period of the contracts rather than the lumpy sum upfront one-off payments. Can you give any further information on this particularly important phase of the business? I guess it's that transition from lumpy payments to almost sort of recurring revenue payments.
Yeah, I mean, I wouldn't say that it's sort of slowed down, because you can see we've taken 6.8 million to date that we've received from customers, but it'll certainly smooth the receipt of cash with this more standard model with the capex that I talked about earlier, and then moving to the equal monthly installments after that. And certainly as we get more and more larger contracts and all of them reach that point, then yes, it's a much more smooth and guaranteed cash injection coming in on a monthly basis.
If I could just clarify a little point on that. So just to re-emphasize really that for the hardware, we're getting that paid up front. So I don't want people to think that we've got to pay out for the hardware and then we have to, collect that over monthly installments. No, you get that up front. Secondly, then, as Heather said, for the software and the services, that's equal monthly installments, the end of every month. It's just continuous. So that's fine because, at the end of the day, that's really, margins of, 95% plus on that side of things. So just to clarify.
Right. No, thanks for clarifying, John. Another one we've got here, with the use of solar generated power electricity being part of the energy mix in India in particular, and also potentially in the MENA regions of Africa where you highlighted you were operating, and other regions, can you give any details on the adaptability of the CYANCONNODE OmniMesh solutions for the potential use in solar powered electricity and for any other renewable energy supplier such as wind and hydrogen?
Yeah, so as I mentioned, look, our solution can hook up any device in anywhere in the neighborhood network. Now, obviously the measurement of what you've just said, the solar and all the rest of it, and wind turbines, yes, of course, all that's going to have to be monitored and measured for the input into the grid, and they need tools, i.e. smart meter tools, to be able to say, yeah, that much has been put back into the grid, and therefore it's netted off, what the burning. So we do have that. I mean, we're not directly ourselves going to the wind turbines and asking them to, have a sensor and log in there. There's different tools that can get that into the grid, but all of it is important as a global, smart cities, smart grid, if you like, of being able to hook all these devices up and make sure they can be measured and monitored.
That's great. Thank you very much indeed, John. And as I say, I know we have run over time. We've still got a lot of people on the call. So if you do have a little bit longer to go through, we have had some further questions come through. If you could just, where appropriate to do so, perhaps start at the top, just read out the question, give your response. I'll pop my camera off and pick up from you at the end.
Over how many years are the quoted potential revenues of 400 to 600 million for the 20 to 30 million meters deliverable? Well, as we've explained, the way the contracts work is the contracts, most of them are up to 10 years, with 60% taken in the first 2 to 3 years. I say it's typically going to be 2 years, with the balance over the remaining 8 years. So where we talk about this would potentially be one over a period of anything up to 5 years, and then roll out for a period of 10 years. John, I don't know if you want to say anything further on that.
I think you've covered it really, Heather, with that. Yeah.
One for you here. How do you compare with the cellular NB-IoT LoRaWAN combination?
Yeah, look, LoRa NB-IoT, I mean, it's a bit like Sigfox, which is very similar to LoRa. Sigfox, a lot of money being put behind that company. Unfortunately, went into bankruptcy sort of within the last 12 months. French company, and the LoRa and Sigfox, they use the scenario of build a network and they expect customers to come. What we do is we win contracts, then we build a network based on that contract. And, when you look at NB-IoT, I mean, NB-IoT is very good and proven for getting data through on water and on gas. And that's great. Now, coming to electricity metering, it's a bit more complex because all the parameters that you have to look at, measuring sort of time of day usage, net inflows. Every 15 minutes is a data reading that has to be sent through. So masses of data goes through the network. And it's really, it's unproven yet, NB-IoT, can it reach the performance levels of 99.5%? It's a watch and wait on that, really. Let's see. But again, NB-IoT is a derivative of cellular. That's all it is. It's cellular, and it just uses a thinner stream to get the data through. So we'll see what the performance is on electricity. And look, it works. It works. It's as I always say, if you don't have competition, there's no market. So we welcome openly the competition on that.
I think because we are sort of running out. I mean, any questions that we don't get to, we could always write answers and submit them along with the presentation. Is that
absolutely? all the questions will be uploaded that you can review, Heather. We can publish those and put those back onto the question. I am kind of conscious we are coming up to time, and you have covered a lot of questions that we've gone through today. Just a reminder, if there are any further questions that do come in, the team will be able to review those. And as I say, we'll publish responses where appropriate to do so on the Investor Meet Company platform. Just as we are coming to that time mark, John, just before redirecting the attendees, just to give you some feedback, if I may just ask you just for a few closing comments, please.
Yeah, sure. So pleased that people have given time to listen to us today. And, we are at this inflection point. We are negotiating a lot of contracts right now. And it's really is a very exciting time for us.
That's fantastic, John. Heather, thank you very much for updating investors today. Can I please ask investors not to close the session? You'll be automatically redirected to provide your feedback in order the team can better understand your views and expectations. On behalf of the management team of CYANCONNODE PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and thank you all.